Yesterday, Nvidia announced a $50 billion stock buyback plan. The revenue and earnings exceeded expectations, and they seem to be currently cruising on all cylinders. But I don't think this was the best use of shareholder capital. Let's think about the current state of Nvidia's business and how they became a $3 trillion company. Nvidia designs GPUs and sells them. The value of the company is mostly in the proprietary GPU design and architecture. So if you hold Nvidia equity, you're betting that the revenue and earnings continue growing quickly, and perhaps more importantly, you're betting that another chip designer, entrepreneur, or AI itself won't design a more efficient or less expensive GPU. By holding Nvidia, you're betting against human ingenuity to compete with Nvidia and build a superior or cheaper product. Now, maybe Nvidia remains the leader with massive margins for some time, but this industry of AI and computing is evolving so fast, there's no guarantee they will last forever. In fact, they almost certainly won't last forever. My recommendation to management would be to not buy back stock, or at least consider allocating a significant portion of the $50 billion to strengthen the company balance sheet, and to do this with a superior form of money, Bitcoin. Why should they do this? Well, currently the market values Nvidia at $3 trillion because their revenue and earnings in dollar terms are growing fairly rapidly. But the dollar is debasing, so is measuring the performance of a company in a money that gets debased the best way to make intelligent financial decisions? If you measure Nvidia in Bitcoin terms, money that doesn't get debased, their revenues and earnings are not growing nearly as rapidly. In fact, they may be stagnant or declining. So should you really pay 38 times revenue for one of the largest companies in the world when its revenue and earnings aren't actually growing, as measured in immutably scarce money? Of course not. That's a foolish investment that most of the world is making because they're using the wrong unit of account. What Michael Saylor and others have started to figure out is that financial assets are massively overvalued compared to Bitcoin because everyone is focusing on the wrong monetary technology. So the smart decision for Nvidia would be to not buy back shares. Instead, they should use their overvalued stock, trading at 38 times revenue, to buy Bitcoin. This would let them capitalize on the market's overvaluation with their company trading at 60 million Bitcoins and lock in that value with perfectly scarce Bitcoin. Will this happen? I don't know. Should it happen? Probably. If the Nvidia management team happens to see this, feel free to DM me to talk about Bitcoin or enterprise Bitcoin custody. Thanks for watching, everyone, and see you next time.